as you know, there's the relationship between oil prices and gold prices. And I do think that as oil prices continue to rise, that will have an impact on gold prices. And I do think that oil will rise. I mean, for example, right now, with President Biden, one of his first things was to rescind the Trump's executive order to build the Keystone Pipeline. And the Keystone Pipeline was a key component in making sure that the United States would be independent of influences in the Middle East and the world as far as its supply for oil. But now without the pipeline, we are more dependent, which means our economy is much more sensitive to what the Middle Eastern oil producers want to do with oil prices. And I think they see increasing oil prices, especially as the economy begins to recover. When I was the Mint director, the United States Mint made both gold, silver, and platinum bullion coins. And so asking you to pick which one's my favorite out of the three is like asking a father to pick his favorite child, right? Like all of them. But for the investors that are listening in on your call, I think there will be a drive to all precious metals. Gold, we've already talked about. Platinum is already, I believe, at $2,200 is the current price for platinum. So it's already very high. But I think there's some room in silver. And here's why I think so. Silver is generally viewed as the poor man's gold. So the same drivers that drive gold prices up also drive silver prices up. And one of the reasons why silver prices haven't caught up with as it hit new records just like gold has, is that a lot of the silver has industrial use. And with the economy not being so good right now globally, the industrial demand for silver is down, which means as investors invest in this, there's plenty of silver out there because industry isn't demanding it, and there's more than enough to meet the demand from silver investors. But once the economy starts recovering, industrial demand for silver will go up, and that will put a squeeze on supply. And I believe that you're going to see very aggressive increases in silver prices. The other way to look at this, Biman, is that with silver prices, when you look at the historical ratio between gold and silver, it usually takes about 60 ounces of silver to buy 1 ounce of gold. And right now, that ratio means that either silver is way underpriced or gold is way overpriced. I think gold is where it should be, which means silver is underpriced, which means that it has the potential to have a good price appreciation in 2021. Yeah, that's such a good question. And as we saw the beginning of the rise of gold prices in the last couple months, and one of the reasons for that is the dollar had hit new lows compared to other currencies. But now the dollar is strengthening again. And so you see a little bit of contraction on gold prices. I think in the future, what you're going to see with increased fiscal stimulus coming from the Biden administration, you will see, so as we borrow more money to fund federal government stimulus, you're going to see more pressure, downward pressure on the dollar. And as the Federal Reserve continues with its very easy monetary policy, that will again be downward pressure on the dollar. And the only reason why you've seen some of the recovery lately on the dollar is when you take a look at how other countries are doing, the dollar lately is doing better than these other countries. And so I liken this to be the dollar is the cleanest shirt in the dirty shirt hamper. all the economies are not doing well, and the US is doing relatively well compared to all the other economies. But when you take a look at it objectively, the dollar still is way below its normal strength level, and I don't think it's going to recover in the long run until the economic recovery, the uncertainty disappears, and and inflation doesn't show up. Those are the two big factors that will raise the value of the dollar. I do believe in that thesis. I do believe that people, a great number of financial investors look at gold as the insurance policy against inflation. And until the risk of inflation disappears, there will always be interest in gold. And so what happened last time in the economy was that the economy recovered so slowly that there was no inflation. And the consensus was that that slow recovery was going to be the best that we were going to get. And so that really gave the Fed a chance to sop up all that excess liquidity that they created before inflation happened. In this case, we have a similar dynamic going on here. If the economy recovers slowly, you're going to see people start dumping their gold and start putting it in the market because that uncertainty and the fear of inflation is just not high enough. But if the economy starts bouncing back aggressively, given the amount of stimulus that's already in the economy, it will be very hard for the Federal Reserve to get rid of that excess liquidity quick enough to get rid of inflation. So you're going to see interest rates begin to shoot up aggressively if the economy recovers too fast. And so that's really the key, is after these rounds of stimulus and we begin to see the economic recovery, is it going to be a sharp recovery or is it going to be a gradual recovery? If it's gradual, there's plenty of time to prevent inflation. If it's an aggressive recovery, I think we're going to have a lot of people fleeing to gold.